Welcome back, guys. How are you guys all doing? First streams are gonna start in about 4 minutes. On the dot, right? I'm not late today. Feeling good. Ready for another breakdown, obviously. So let's see what we can get. No, it shouldn't be a new mic. It should be the same mic. So those on Zoom, if you joined on Zoom, it's probably like you don't want to get echo on the YouTube streams as well. So just do what you do for Don streams. But yeah, figure it out, boys. Does it sound better? I feel like I haven't changed anything, so maybe the reboot actually was useful. Less background noise. Maybe. Who knows? I'll take it. But welcome, everyone. Gonna get started in about 2 minutes here. Just waiting for a couple more people to join up so I don't have to repeat myself. We're getting there. I think we peaked at like 40 something viewers a couple days ago, so when we get to about 15, 20, you know, pretty good start there, to be honest. Some people come here just to troll, as usual. What is with you today, TradingView? Yo, Tom, welcome back. It's going to be a challenge and a half. I have not had it this laggy in a while. Yeah, doing good. Didn't want to be late to another stream, right? So got home a little bit earlier today. I'm actually gonna go grab some water real quick. Just in time, right? Oh, I'll DM you later, Bougie. Don't know what's going on. I feel like a couple people have had that issue, so I'm just slowly trying to trickle people into the Zoom. I'm also trying to figure out like how many questions I'm allowing people to ask, because obviously they can come on here day after day to ask, right? But I want to give equal opportunity to everyone, so all good. All right, let's get into the breakdown. So welcome back. These were a couple positions I had, right? Took this off the high, was in drawdown for a while. I actually closed off in the middle around here for a net break even, but concept worked out. So the pineapple actually was about 80 pips. Normal was about 20, so would have been 100 pips, but I had to go to the hospital taking the girlfriend there, so all good. We have another day to catch positions, right? Let's jump on the monthly. Did the monthly break the highs again? Oh, you came close, but you're respecting, right? You're respecting, and I would say you're respecting a level towards 1925, but that's the daily. We'll get there. Is the music too loud, guys? I'm going to turn it down a little bit just so I can hear myself. Cool. But yeah, so the monthly came close to re-breaking, but you're at a decision zone, right? You're tapping into some major levels towards, like, I would say not like the monthly levels, but weekly and daily levels. The monthly, you've still got room to drive up, right? Drive up for the rest of this range, which is about another 500 pips. So that could happen. You know, we have news tomorrow as well, I think. So, you know, that could be the catalyst we need to start pushing price up again. But just understand that on the monthly time frame, you still have range to fill, right? You've already made your decision down here. You're rejecting pretty hard as well, right? You're rejecting pretty strongly around 18, 19, 18, 16 levels to start rebounding back up. So cool, right? The weekly also was creating that bottom wick. If it starts flipping, it's going to look to fill the monthly range, right? Up to around maybe even retesting the 2000s level, right? So as that happens, we can get positions on the smaller time frame. So let's just see how that's going to happen. Going to go to the daily. Daily is going to be a closure, as I mentioned previously. I'm going to have it like respecting this around 1926. Can move it slightly down, but I don't want it to have it too far down. Yeah, 1926, 1925 is a key level on the daily, right? And as you're closing respecting, I'm expecting a top wick, right, and then a flip. That's just general, you know, when prices are respecting this. This is basically, this could be a daily zucchini, right? You have your range 1 here, your range 2 here, right? And then once you get this breakout below, I'd say maybe below like these levels at 1913, it's going to start driving down, right? Because you're respecting this on the daily. So when that breaks, range 1, range 2, celery on the range 2, down. It's a perfect zucchini to come down if that happens. But before that happens, I'm going to need a wick that's potentially breaking the previous daily high. And as that happens, right, we're going to take potential wick entries to start coming down, right? So the daily currently is aligning really well for us to take some sells, right? Some buys to get up there potentially, right? If the next daily starts coming down, pushing towards these sorts of levels first, right, we could potentially take our buys to start going up. But generally, I would say we're looking for those sells. Once it starts breaking above, you know, look at these wicks here, right? Every time you're respecting here, you're getting a wick around these sorts of areas and then driving down. That's exactly what we're looking for. Yeah, so we're looking to mirror these sorts of pushes, even like these where you have some wicks to come down, potentially grabbing more liquidity. But you know, we'll see that as it prints and as we get more structure on the smaller time frames. So let us look at the 4 hour, the 1 hour, and just generally our ranges around there. So you potentially faked out on the 4 hour, which is quite nice. If you put your level here, you could have respected actually on the 4 hour. Depends how you look at it, right? 1923. Let's look at this. This is an area we're looking to mirror relatively well. So I'm gonna put a level here. Put another level here. 29, and then, all right, as we're in this range, I would say we're looking for those wicks towards here. Say anywhere in this range here. I can move it slightly up just to finesse it a little bit, but I'm gonna put my first sells here. Why? I'm understanding you're respecting these areas, right? Potentially even respecting another smaller range down here. Once you get that, if you get a top wick breaking the previous highs towards these areas, you're looking for liquidity to get grabbed to continue going up, right? So this is your liquidity to grab liquidity down here before you're able to flip and continue the motion, right? So what does this look like for current price? You're in this range, right? You haven't closed above, you haven't closed below. So cool. If you're continuing to be in this range, closing, respecting, I'll look for top wicks around these areas for that rejection. What's that going to look like in terms of like a line, right? You could start filling this, ranging, and then all of a sudden, right, come on to grab that liquidity. You're still in the range, you're closing, respecting, and this is what we're looking for. I think most likely what's going to happen is something like this, right? Either you have kind of like another closure rejecting here, and then it suddenly goes up even though you're respecting this range, or you can get something similar to this where you get something like this, right? It's just here, all of a sudden it pushes up, in like one really quick candle or a wick, and it starts coming down. So yeah, these are kind of the two moves we're generally looking for, I would say. But right, as that happens, we'll see it. We're going to see more motion being printed. But I would say generally, like this 4-hour level lines up pretty well here. 1923, 1922. This one here is at the top of this range. I'm pretty happy with. So as long as you're in this range, right? Just look at what happened here, right? You're pushing up, you're ranging here, you're ranging, you're rejecting at these levels, right? You filled this range. This range is not a small range because it's the 4-hour, right? This range is nearly 50 pips, right? It is 50 pips. So because it's 50 pips, right, we can definitely take positions here. Even if you got in at the top of this wick here, and then you took that position there, that's 40 pips for you, right? We're not looking to take the whole move, right? We're not looking for it to reject. If it does reject all the way, cool, we'll take runners, right? But understanding that this is the part of the move that we're playing, right? Just this tiny bit, that's all we want from the markets. But that's something that's likely to happen, right? And then I would say in terms of the order of things, because we're quite bullish at the moment, right? We were bullish. We kind of broke out of the previous area. So if you go to the 1 hour, the previous daily, we were kind of ranging below 1922. We started breaking above. We faked out. We're going to look to come up and fill these ranges, which is perfect. As we come up, we're going to look for these sells down here to retest 1928, potentially coming down further, right? So this is perfect, right? It has this local liquidity to grab higher time frame liquidity. And then as that happens, it's going to come down. But obviously, we're also looking for buys. All right, so let's have a look at where we can potentially get our buys. Let's have a look. So when we're ranging here, where did you grab liquidity before you were able to break out of the range to go up, right? So I'm looking at two potential scenarios. One is if you're still ranging here and then you break below, are they valid buys to go up to take these sells? Probably, right? And also, once you break out of this range, where are the potential buys to go and fill the rest of the range if you don't have enough liquidity, right? For example, you get a range, right? Breakout, right? Where you can grab that liquidity before you're able to fill this, and then we'll look for this potential sell to come down here. So if this happens, right, if you get a breakout, then you're grabbing liquidity, only look to target this small area here. But if you're ranging here, right, ranging, and then you're still respecting something like this, right? You've closed respecting, bearish candle respecting 1928, 29, and then you come up, cool, I'll look for this, and these are the chances where you potentially can get those runners, right? Because these ones, you're understanding that this is just grab liquidity to push up. This one, it's grabbing liquidity to push down, right? So here you have a short-term bearish trend, here you have a short-term bullish trend. So just look at what you're playing and catch what you can, right? You don't want to catch the whole move, just catch a piece of it. So cool. Buys, I'm looking at, potentially, it hasn't really tapped into these levels yet in 1903, 1904 levels, like looking at these wicks, right? But at the same time, it doesn't need to come all the way back down, right? You've broken back into this range, right? You've also tapped up to these areas, so you might not even come back down to 1917, 1915 for buys, mimicking this wick here, right? But let's have a look, right? So price is in this area. You've already tapped into around 31. Last time you tapped into 31, closer to these areas, so the sells here still are okay, because you could be potentially mirroring this, right? But after you grab this, you didn't really grab much liquidity before you started going back up, and you broke above. Potentially you can get the buys. I'm looking at these wicks here, this wick here, and also this kind of smaller level around here. Potentially you can get these, but to get that I'm going to need some form of like closure above, indicating that it wants to go above. You're retesting the highs. But I think this was this also like a small breakout, right? You could say it was potentially respecting 1929 towards here, but like retesting the highs, and then it comes down after closing pretty, you faked out, coming back in, and then you just suddenly pop down to grab that liquidity, flipping. You could have taken the flip here and start retesting that. But so let's have a look at if this is valid over here. So we were 1914, 1922, and then now we're in let's 29 to whatever. Okay, so 29 to 22 after faking out. Let's look at the 1 hour. Right, not this side. Look around here. So we were in this range before we faked out to go back up, right? We tapped into around 31 areas. We rejected off of it. So we grabbed liquidity towards these sorts of areas. I would say these are more dangerous buys because in general, if you just look at what happened in terms of price, right? Your action is this. Went up, down, up, down, up, down, up. I'm going to ignore basically all of this. Up, broke these lows, came down, liquidity started going up, right? So if you ignore all of this noise in the middle, right, this is just price making a decision in a range, your next level that it's looking to tap is towards here, I would say. So it's difficult to take the buys to go up. You might be able to get it on a very lower time frame like 15 on the 5, but generally in terms of higher time frames it's difficult. So in that case, I'm going to be looking for buys after the sells, right? And the buys I'm looking for are closer to these areas, right? And I'm also conscious that these areas got tapped, right? After you tapped into 33, 33, 34, right? You came down to these areas you made a decision. In this case, you needed more liquidity to come down. In this case, you need more liquidity to go up, right? 1914, what does this look like? Cool, right? You've just faked out, right? So if you tap into here, right, and we get those sells, cool. If the sells don't come to those levels and it continues to drive up, cool. We will do another analysis when that happens, right? You want to do your analysis probably like every 4-hour candle. But if this starts popping up and then it comes all the way down to here, what's happening in terms of this price, right? You've broken all these lows, you've indicated you're going up, you've broken above these highs, right? If you get a closure, even better, right? Then I'm definitely taking the buys to go up. If you don't get a closure, I'd ideally like it to respect this range here between 29 and 34, and once it respects here, right, I'll be looking to take wick entries towards here to go up. And what is that going to look like in terms of respecting? It's going to be this, right? Up, down, potentially another up here, and then a quick liquidity grab to go up. And this basically is just bullish candle, bearish candle, a bullish candle respecting this area with a top wick. If it has no top wick, it's difficult, right? If this has a top wick, cool. Once it comes down, it'll have like no bottom, and it'll have like no top wicks as it's coming down. It's a really quick liquidity grab. Once it taps around these areas, we'll look for potential entries. And this entry, right, is pretty safe, right? If you take a buy towards, let me just mark this up real quick. If you take a buy towards here, you're looking to take at least this move up to, I would say, around these areas here. Right, you're looking at these. So this move, let me mark up that range for you guys. Probably looking to take this, I'd say. Oh, sorry guys, it's a bit laggy, but I would say you're probably looking to take that, and it's not a small range. Well, that's 15 to 19 basically. That's like 30 something pips, just shy of 40 pips, right? It's definitely a tradable range. That's exactly what I'm going to be looking to catch. 100% you're going to be break even by the time you probably hit like 20 pips at the top of these areas, right? Smaller time frame ranges in between, you look to go break even, but in general I'd be looking to target around 40 pips for a full closure. You could leave some for runners if you close like partials at that kind of level, but that's what you're looking to take, right? Because you're conscious that as you tap these levels, it's a high chance you could start driving down, because then this could just be a continuation of the bearish motion, right? So that's pretty simple analysis today. Just a sell and a buy. Price is still in this range, right? We created this range on Monday, right? On Friday we had this push, Monday we came down, and now we're just in the same range. We haven't had a wick above or below, we're just in the same range. So it needs liquidity to go anywhere. Obviously if it starts breaking below these areas, right, and you're not getting that rejection, you could look to get, if it comes down to here, taps these areas, you could be looking to get break even towards here, or like a small loss towards here before it starts driving down. Because if it is, right, it's high chance you're going to retest these lows, let's say at like 1896 towards like 1897, Last time that happened, where did we go? Whoa, I am so laggy right now. Yeah, it's just this. Yeah, so the last time that happened, once we tapped into those levels, we're very bullish at the moment, so I'm not expecting it to come down all the way, but if it does, right, you might be able to get more entries towards like 1983 sorts of areas. But as that happens, you'll see it, and your stop loss is not going to be all the way, right? For this position, I would say your buy here, your stop loss is probably at the bottom of this, so around 130 pips, and then for your sell position, I would say you can probably put it like, I would say you could like pretty safe to put it around like 80 something pips. But if you just want it to be like your next level of rejection, I would put it up here. Probably like, that's a little bit steep. Let's have a look at what happened in price previously. This is okay. I mean, I'll probably keep it around here. You have some rejections towards these areas as well. Maybe like 120. I'm just looking at this, right? Specifically, this bearish candle here respecting. So if we break those highs, there's a high chance that, you know, these are also wicks down to these areas. So just above those would be pretty good. But yeah, that's basically analysis. Nothing too much going on. Yeah, just another day in the markets. Cool. I'm gonna unmute the squad, and you guys can ask them questions. Yo.
Hello.
Yo. What's up, guys?
Does it matter who asks the question first, or?
Nah, go for it. I guess you started, so you can ask.
For wick entries,
Yeah.
is it always preferred for the wick to break the previous candle's wick? Because I would have assumed that when it breaks, it's like gonna keep going further down.
Yeah, it depends. So there's multiple scenarios. So if I start drawing it out here, is it laggy for you guys as well? Right, it's really laggy, right?
A little bit, yeah.
Yeah, fucking hell. Alright, anyways. So for example, right, if you're pushing up, in case one where you get a breakout, right? Get a breakout and you're potentially respecting, just even better, right? If you're respecting, you're expecting it to go up, right? So in that case, I'll be looking for a wick in this range. So not necessarily breaking these lows, but I'll look for something around here to start going up, because I'm understanding that at any given point, this could just start to tap and like start going up. But I'm also still like this point where I'm trying to enter will also depend on what happened in the previous kind of like couple years, like, so price action looking left, right? Because I'm ideally, if this is ranging in a specific area, you'll see price typically tap certain points before it's able to go somewhere, and it's just because, you know, it needs the momentum, it needs to grab some orders from a very specific point at a very specific price before it's able to drive. But if you get like a kind of like a breakout and then like a celery sort of thing, and then you potentially get like, I don't know, like a potential entry towards these areas, that's also okay. I would say this is probably your first position, right? I would say if you're looking for price to, like, why we typically look for price to break lows or highs, right? Let's have a look here. Yeah, I mean, like, this is a pretty good example right here, right? You're pushing up, you're ranging, and then suddenly you broke all the lows, you came down to 1903, 1904 before you were able to drive, right? It's just because at this point you're ranging, you don't have enough volume to break out of the range. So you're grabbing volume here to start going up, right? In the case that this was bearish, right? For example here, right? You're ranging, you broke the highs before you came down, right? It just happens, like here, you're ranging, broke the lows before you went up. Again here, right? You know, you broke these highs and you're coming up to here, and then you started coming to retest. You didn't break the lows here, but you grabbed liquidity to start going up, right? And here, right? Grab liquidity, start going down. It just that's just what price does. So I mean, in general, it's just like what we've noticed in the markets for the past like couple months, and Don probably for a couple of years. Like, when price wants to go somewhere, it typically drives from specific levels, which is why we're looking for wick entries towards those levels and looking for it to mirror certain pushes.
Elvi, can you explain what you mean with wick entries? Like when
Yeah.
it's like forming a bottom wick and then you like enter on the bottom of the wick. You mean that?
Yeah, literally. So, for example, right, let's take this example. This is a pretty good example. So here, right, price was ranging here, and you had a fake out, right, confirming that this is, you know, you don't want to go after this range. You're going up, you're filling the entire range, right, and then suddenly you came all the way down, right. We're pretty bullish for price at the moment. You just had a fake out back into the range, pretty bullish, right? So as this candle is coming down, I'm looking in the past. Where does price grab liquidity before it wants to go anywhere? I'm looking at this, right? I'm also looking at this candle. Alright, and then I'm looking left. Oh, cool. You know, I'm getting all these candles towards here. I'm looking for entries at these areas. So that once it taps, right, you're going to get a strong rejection towards these levels, you know, for us to start driving back up. But I'm not going to be looking to retrace the move all the way to go up, right? I'm
Just
only
like a little bit of the
yeah, because I'm understanding, yeah, like it's breaking the lows. There's a high chance it can also come down, right? For example,
But
here.
my question is, if you see the price going down, why
Yeah.
do you have like the confidence to, you know, like, okay, right now, it's gonna retrace back, just because of the level, because of the, like when you.
So
go
it's
back and
yeah, I see what you
the-
mean. It's a combination of a couple of things. Number one is level, because I'm understanding at this level, very specifically 1903.941, there's a high chance that price will tap that level, number one. Number two, there's a high chance that price will reject or make some sort of decision at this level. Whether that decision be once it taps, right, it just goes down, right, and then it rejects a little bit to retest and then drives down. That's number one. Number two is it, you know, does this and then does something like sort of a range, right, and then decides to go back down, or decides to range and then go up, or there's only like a couple scenarios, right, or it just taps the range and then it starts flying up, right. There's only a couple scenarios, but I'm understanding that every time price taps this level, it made a decision, right. It tapped here, rejected, tapped here, right, drove through, but you had some sort of like a rejection here, came back up to grab liquidity. So this was some reaction here. You had a celery plate come down, you faked out past this area, you rejected celery to go back up, rejection here. Like, I'm not in the middle of a range. This is the top or bottom of the range. Yeah, does that make sense?
Yeah.
Yeah, and then so it's like the confidence, yeah, it'll come with just experience. Like, for example, you see this fake out is just one more confirmation that price is going to be bullish. You were pretty bullish for the previous couple of days leading up to this point, right? And we're always looking for liquidity. Like, you're ranging, which means that you don't have volume to break out. So we're looking for liquidity to be grabbed. And where's the likely levels it's going to get grabbed? Probably first position here and then the second position here.
Okay. Another question is, if you see price ranging, you know, in an area,
Yeah.
and you see like the wick, like when the wick who went down to grab liquidity, you know,
Yeah.
and when it opened, it went up, you know, you see the
Oh, so for example, you're looking for liquidity to grab buy here, but it went up?
This red wick, yeah. First, when it opened, I think it went up,
Yeah.
and then went down, and then grabbed some liquidity. But how, you know, I have the feeling like it just could, like, you know, break the high and go up.
Yeah, I mean, let's look at this on the 15 and what happened. Because if it goes up, there's a high chance we wouldn't get a trade. Because if it goes up, we're understanding that, you know, that could just be the push to start jumping all the way up, right? But let's have a look. So cool, right? Let's have a look here, right? You had this massive bottom wick here, right? Previously, so you came down, you faked out, went back up, right? Filled the range. You had this massive rejection here, and then suddenly you came down, right? I would say generally it's difficult. I wouldn't know if you were just looking on the 15, it'd be difficult to tell if you would have had this position. But because we use multiple time frames, right? If you look at the 30, the hour, and also the 4 hour, which we were looking at just now, everything aligns to show you that you're actually very bullish. And in that case, right, I'm going to be taking this trade off the higher time frame. So obviously the 15 maybe wouldn't make sense at the moment, right? Because you filled the range already, like, you know, you haven't broken above or anything. So why are you suddenly coming down, right? I'm worried that it's going to come down. But if you look on the 30, on the hourly, on the 4 hourly, yeah, like, if you look at the 4 hour, like, it's very clean, right? Right. If you look at the hourly, it's probably relatively clean as well. Right. You had some sort of fake out. You had a decision level here as well. Faked out, you know, you're bullish, you broke these highs as well, right? That's the start of a reversal, right? So you're still pretty good in terms of this. And also we're just understanding that every time price taps here, it's like if it wants to go down as well, if it really wants to go down, right, this liquidity is enough to drive down to here. But to go further, you're going to need to grab liquidity to come down.
Yeah.
Right? So I can take this move. Yeah?
Okay.
Yeah, Jacob, do you have a question? I think you've raised your hand. Oh, you just want to unmute.
Is that Jacob from the DonVo?
Yeah.
Yeah.
No, I don't got you.
So.
No, I took the trade yesterday. It had touched my level. It was like at 1913. It was close to yours.
Yeah.
And then, but I looked up and I don't know what I was doing, but I had missed the original push, and then it pushed down to like 1912, and then I entered. And I don't know if I should have like
a buy
still
or a sell.
Like we were just grabbing liquidity for the buy.
You entered. I mean, did it work out? Did it play out for you?
Yeah, it did.
Yeah, I mean, like if you just look at the short term.
It was
structure.
look. If you can go to like where was it? Where was our buy? The buy wick from yesterday? Just there.
I don't know where it was, but like let's say it's around these areas, right? I would say generally like the buys here are pretty good, right? Like you understood that you had a shorter time frame, like a smaller time frame respecting of this range. You're still in the range. You've closed bullish respecting this range after an hourly no bottom wick, right? So you're very much in this range. Suddenly come down, breaking all these lows. If you took the first position, yeah, I think this was the first position in 1914, right? And you rejected. We were looking for this, right? You got a rejected.
That too. My first, like when I had missed the entry, it had already rejected, and then it moved like 20 pips, and then it came back down, and then I entered right there.
Yeah.
And then that was the move that was the very very bottom. That was the very bottom one.
Yeah, I would say you'd need to see what's happening on the lower time frames. Like if I just look at the hourly now, right? Obviously, there's a lot of shit that happened between the start and the close of this candle, but like if the hourly was respecting here, the buys once it broke the lows were not bad. I would say, because you're respecting, right? At any given point, this could flip, start driving up, right? And even if it wants to go down, it will grab liquidity to come down. You know, like this decision here, I would have got out towards these areas because that could be liquidity for you to come down, right? And then if you look on the 30 or whatever, like you were respecting here, you didn't break out of the zone, the range below 1914.93. So because of that, the buys are still okay. Like even at this point, right? If I look on the 15, it's still respecting probably, right? Like these candles, they were all respecting. So a buy here was, I think, would still be okay. Yeah. 1912? Yeah, maybe. If you're expecting like the 30 or like the hourly to flip at that point, I don't know exactly what happened, right? But if
you see, but my thought process was just that like I missed my entry, and then I didn't. I thought too, like it had happened like as soon as like it pushed up and then we pushed down quicker, and then I was just like that just seems like liquidity. But I don't know, like what would you think in that situation? I think it was right here. Yeah.
Yeah, I think basically when you get like...
Wait, no, was it? Yeah, I think it was, yeah.
Yeah, I think when you get that first retracement, right, once this happens and then it starts breaking the lows, it's difficult to enter another position. If you haven't gotten out of the position, you'll feel like you want to enter a pineapple because you want to go break even, right? But if you kind of just look from like a third point perspective, right, third person's perspective, if you didn't enter any trade and then it started breaking these lows again, what is the likely scenario? You're breaking lows, you're going to drive, right? So it's difficult.
Or go ahead.
No, so yeah, so as you're breaking the lows, it's difficult to get into a position. Was a strong level at 1914, so taking the trampoline here was okay, right? But as you started breaking those, it's difficult. I would have more looked for, you know, this closure above, right? Potentially this position, right? The breakout of this to start driving back up. But I wouldn't have taken much here, I would say. So my two positions would have been the first position once it tapped 1914. My second position maybe when it like broke out of here, but it didn't really have a bottom wick, so I couldn't really get in at an advantage. So taking the breakout here is also risky, because if you look at this, right, if I got a position here, I would have been potentially like something 20 something profit. Stops to break even, probably would have hit break even at this candle, right? So yeah, I would say those are the only two positions I would have caught if I traded that.
Look, can you drop down to like the 15 or the 5? I want to see. Was it there?
I mean, it doesn't matter where it was specifically, right? As long as you look at, like, all the time frames need to make some sort of sense for you to take the trade.
Yeah, no, I think this was my first level that I had, and then yeah, it made this push up, and then this is where I kind of was like. So if I would have seen that no bottom wick right there on the 15, would that be valid too? To be like, I have no more range?
Maybe. I would say maybe not in this case, because generally, look at what happened on this 15, right? You closed no bottom wick here. And then you also closed below, respecting this range. So it's difficult to take a position because at any given point, this 15 flip could have just started driving down. So yeah, it's difficult there. Yeah. Connor, you have a question as well?
Yeah, I was curious. With the wick entries and the flip, they both seem to get set up in the same way. When would you prefer to enter on the wick, whereas wait for the flip?
Yeah. Generally, I'm looking for wicks when I'm going with the trend, right? But occasionally, when I see that price is looking like it needs to grab liquidity, I could also enter on the wick. But against trend, they're just slightly. It's slightly more difficult. So, for example, when prices now, right? It's grabbed liquidity here, drove up to here. This could be enough liquidity for us to drive all the way up to break these highs at least, right? But is this enough liquidity for us to drive past? Like, it doesn't look like it, right? Unless you start breaking all the way back down, breaking these lows potentially towards 1903 and then driving back up. Because then if you look at the 4 hour, that would make a lot of sense, right? You're doing something like this. You're ranging, you're breaking all the lows and then coming up. So if that happens, then cool. I'm not going to be looking for wick entries to start coming down for that rejection, because on the higher time frame you've already grabbed higher time frame liquidity essentially, and you're just going to start driving on the higher time frames and it's not going to stop. And that's what kind of what Friday was, I guess. Like, you know, you grab this liquidity all the way down here when the monthly was creating that bottom wick, right? But as that happens, so taking the kind of against bias wick entries is difficult. I would mainly be looking more for the with bias, with trend kind of breakouts, and wick entries in that kind of direction. So, for example, you're respecting here, right? If you get a bullish closure on the 4 hour here and then you break all these lows, I'll look for wick entries to go up, right? I wouldn't be looking for wick entries to go down. But if you're looking for breakouts is more flexible. Breakouts, again, I would refer back to kind of range 1, range 2. Have you taken Don's free course or like the paid course?
I read his whole playbook, and I read all the stuff online where it's like the 28 nodes or something.
Yeah, so generally we basically, like, if we're taking breakouts against trend, we usually look for range 1 to be established, range 2 to be established, and then like a celery after the range 2. So what that looks like in terms of this is, like, for example, let's say you're coming down, right? Ranging, and then you get like a breakout here. So if you were like ranging here, breakout here, I would be worried because this could be a fake out to go back up, right? But if once you're breaking here, you get a respecting, I'd look for this breakout here.
Okay.
Yeah, but if this was like a fully bearish trend, I'd look for wick entries if it broke these highs as well. because you've had this breakout as well. Yeah, I think it also depends on like your own trading style, because breakouts, you don't like, it depends on how steep the wick is, right? If the wick is like very, very steep, like for example you have like this bullish closure here, and then the next candle comes down, breaks all these lows, right? And then you're looking for the flip, like you like once it does flip, you have no idea if that's just gonna start coming down again, or if it flips like a tiny bit and then start coming down, right? But if it's like, you know, the first, it also depends on the time. So for example, on like a 15-minute candle, if it creates a bottom wick very quickly for the first, like, I don't know, 5 minutes, or like 4 or 5 minutes, and then the 5 has like a no bottom wick, I'd be looking for the flip, right? Because at that point I understand that, oh, you have no range to drive down, so the next thing that's going to happen is likely going to push up. And if it pushes up to break these highs, right, what does this look like in terms of a line, right? You've come up, created this low, and you're now breaking these highs, so that's a confirmation that you're going up. So taking the breakout here makes sense, right? Because then you're just going to drive up to your next resistance.
Yeah.
Yeah.
That makes sense.
Yeah. Sounds good. Yeah, this is so much better than just me talking to chat. I swear to God.
Can you, Elvis?
Yeah.
Can you like explain what you mean with, like, I get the point with the no bottom wick.
Yeah.
And it could flip, but how do you know it's just like a bottom wick and then price gonna like drive up? You get what I mean?
So are you saying like if it has no bottom wick, how do I know it's definitely gonna drive up?
Yeah. Why do you like? It's like if the wick is against the like the bias, then it's like a confirmation the price will retrace back.
So
It's gonna flip.
Let's try to, let's try annotating. So I'm gonna draw some stuff. It's probably the worst time to start looking at. Oh my god, where are boxes? Jesus. Okay, here. Okay, so you're saying like, for example, disgusting. So you're saying like if I have like a bearish candle like this, right, with a bottom wick, how do I know it's gonna flip?
No, with no bottom wick, no.
With no bottom wick, right? So you're saying
like just a bearish candle with no.
So you're saying like, for example, oh my god, this is so bad. I hate this tool. Where is it? Okay. Yeah, so you're saying like this, right? And then how do I know it's gonna now flip bullish like this?
Yes. Yeah.
Okay, so if you just look at this, okay, right? If you just look at this, and then we look at what price is doing in terms of the kind of candle, right? At some point you opened here.
Yes.
You came up, came down, right? And then you probably, you know, you hovered a little bit, but you closed here, right?
Mm-hmm.
So at any given point, right, what is your next move? If you want to drive down, cool, you can definitely drive down, but it's just there's a high chance that it needs to retrace, create that higher low before you're able to come down anyways, right? So if we're taking the breakout above here, right, then we're looking for price to break the structure to start going up. But if it doesn't, if it just comes up to here, and you'll see it, right, you'll see it in terms of kind of like where is it gone? Yeah, so you'll see it in the kind of sense where price in this case will, after this candle, right, if it comes up, does this, right, retest this high and then flips, then you won't be activated in the breakout, right? So if it's coming up and then it flips, right, then you would have a top wick here and start breaking down, but you wouldn't be activated. That's why the breakout makes sense, because then you're breaking out of the previous range, and you're breaking out of structure. Right. Once you break this
But-
high, there's a high chance that
Yeah.
it's just going to drive up.
Okay.
Does that kind of make sense?
Yeah, I get you. Like where
Yeah.
there's no bottom wick, no range can be filled, and then price high likely gonna go up.
Yeah.
And then if you break this previous candle high, then you enter.
Yeah.
But
Basically.
do you like think it's gonna go up to the range or like what do you like highly target? You know.
Are you saying like where it's going to tap next in terms of like where it's driving?
Yeah. Yeah.
It's just like you just have to look at the ranges, right? Like for example, like you have a bearish candle. As you're coming down, you have like a bearish candle that's like tapping here, and you're rejecting, right? If it doesn't break the lows and it starts flipping, probably look to take it up to the next resistance. And like this is why we have these lines, right? It's just areas where price will reject at or is likely to reject at. So if you tap these levels, I'd be break even at least. And that doesn't matter if it's like 10 pips, 12 pips. Sometimes.
Why not break even if you like go like your entry is like on the 1 hour or 30 minutes, and then you go down to the lower time frame and then look for like little resistance and then go there to break even.
No, that's what we do. We don't look at the 1 hour for resistance, right? We definitely go down to the small times because the 1 hour resistance might be like 60 pips away. But on the 5, on the 15, right, we're understanding that that's the likely ranges that will get filled first. So on the 5, it could be like a 10 pip range, which is why we go break even at 10 pips. So, I mean, it's exactly what we do.
Okay.
Yeah. But yeah, it's a good question.
Elvis, could you go over Don's trade from this morning? Because I wasn't getting like why. He said he put it down as a 1 hour breakout because he was anticipating the 1 hour flip.
It was a beautiful 1 hour breakout, Jacob.
Yeah, I don't really get that. I don't get.
Where do we get in?
Because the entry, so the setup type would be considered a breakout, but the entry is the wick, right? So could you kind of explain that?
Where was the breakout? Which one?
No, he was anticipating.
Yeah, no. Where was it? I forgot.
I think it was this candle, and then we caught this wick, right? We took.
Yeah.
Wait, no,
No, I think it was the
No,
next one.
it wasn't. Yeah, it wasn't. But I just.
It was probably the next one, right? Yeah, because this was news. It pushed down and it started flipping,
Oh yeah.
and then the 30 flipped. Yeah, I remember. So this 30 closed bearish, right? Like this, and the hourly just started the next 30 just started ripping down, right? So the whole 1 hour candle, I think it closed like weak bullish, or was it this? This was at 1. Yeah, I think it was this candle. 1 to 2, yeah. So this candle then closed bullish, right? Bullish after creating a bottom wick, right? This is liquidity. Once you've grabbed this liquidity and you close bullish, it's a big indication that you have what it takes to drive up to the next range, filling 1930. Right? So once price comes down first, we're anticipating for the hourly to flip. We're anticipating that it's going to fill this range at 30, right? This is why I had a TP towards 30, but I had to exit early because I couldn't manage the trade if it went wrong. But that's why we're expecting, the hourly to flip. We were looking for break even towards around these sorts of areas, and then just kind of letting it rock to these areas. But I think we got stopped out break even. But if you just look at the trade idea itself, it made a lot of sense, right? If you go on the 30, you closed bearish after like a very weak bearish, right? After creating a massive bottom wick, right? You're breaking all these ranges here for the last like 2-3 hours worth of time. And then you also respected this, right? Your next range up. So when that happens, you're looking for that celery to start boosting you up, right? It just so happens that the next 30 minutes, this next hourly came down, created that bottom wick first, which is why we're looking for those entries to go up. Does that make sense?
Yeah, I was just thinking about it more, but yeah, that makes sense.
Yeah. Oh, Fernando's here. Fernando, hello. How are you doing? Welcome, Fernando. Yeah, I mean, let me know if you have any questions, man. Like, welcome to the Zoom. Yeah, I'll invite you to unmute. Yeah, if you guys have any more questions, feel free to ask. If not, I can start going through Zoom. Chat. Chat's got a couple. We have some new faces here, actually. Oh, Carlos is here as well. Phobic, you blew your account 1 week ago and didn't have any motivation to. I mean, it happens, right? It happens to the best of us. If you blow your account, right? I think the best situation to kind of try to get yourself in is take a bit of a rest, right? Obviously, there's some emotion behind blowing accounts, so chill out for a bit. Come back to the charts when you think you want to give it another stab, and then just do it right this time, right? Just always, because if you blew your account, either you blew your account over time and you lost many trades in a row, then I would say review your strategy. But if you blew your account really quickly, I'd be looking at emotions. I'd be looking at psychology, right? It's difficult to start again, obviously, because you just lost a bunch of money or you lost the ability to trade that account. But that's not the end of the world, right? You're back on these streams. You want to trade again because you understand trading is valuable to you. So you will start eventually. It's just letting yourself recover, taking the time. There's no race. You will get there eventually if you just stick to it.
I think, Elvis, you're right. Like, if I can talk about I traded I started for 4 months ago.
Yeah.
And I really waited really long to open a live account because I wasn't sure. I didn't want to blow my money.
Yeah.
And get it away with just with gambling. And last week I opened my live account and I just a little practice, how it feels like with the feeling if I lose money or gain money.
Yeah.
And I feel like when I have a job, and sometimes during work I went to TradingView, looked at the chart, and on my MT5 I opened some trades,
Yeah.
And then there's this feeling, FOMO. I felt like I'm gonna miss out something. I feel like now the big trade will come and now I will get a big return,
Yeah.
Then over the weekend I just think about it, because I lost some money, not much, but it's still a loss,
Yeah.
And then I think why I am stressing about something. It really doesn't matter, If I'm patient, wait, chill, and just think about it, and I stress myself for nothing,
Yeah.
Yeah, and then this week I just go to the live, try to learn anything, and if I'm confident enough, I try to trade. If not, no. And then right now I feel more calm,
Yeah.
Yeah.
The thing is, it will happen again, right? You will feel FOMO again. You will feel oh, it's driving. I wish, because you look at the charts and the nature of humans is that you're gonna look at the charts and be oh, I could have caught that. Oh, I could have made money off that. But realistically, you have to think about, would you have actually made money off that, or are you just risking a proportion of your account to maybe make some money, right? Yeah, exactly, Bougie. Moves happen every day. The markets will move every day, but doesn't mean we'll catch everything, right? We only catch bits of it, and when that aligns with what our trading style is. Yeah, I've dealt with FOMO before. I traded news before, right? I feel like everybody's done something that's that's blown their accounts before, and it's really easy to do it because you just look at the chart. You're oh, it's moving up. Does that mean if I take a buy here, shit, it's going up, right?
Yeah.
Or if it's going up, it's oh, it's gonna come down eventually, right? I'm just gonna come here, I'm just gonna sell now. No, if you just do that constantly, you're not improving, and that's the biggest issue.
Just dumb. I did it today. I never traded news, and then it was during the live stream, when the news came out for USD, And then I
Yeah.
thought like, why not? Why not? I never did that. And then I did it, and then I made like some profit, but it's like, yeah, just like, I say 50-50.
Yeah.
I have some now.
Yeah, it happens, but you'll just, as you go through the cycles, right, as you understand, like after you trade news like 10 times, right, you'll understand, news trading just doesn't work for me. I've lost 9 times out of 10. Like, why do I keep doing this to myself? And then like over that, it's just the experience, right? That's why we recommend people starting with a smaller account. Because if you have a smaller account, if you're losing the entire account, it doesn't affect you as much, right? It's what you're willing to lose.
That's like the only reason I opened a live account, because like Jacob was like in the Zoom call,
Yeah.
you know, with everyone there, and then he talked about like how he like made much profit and then lost it all. And then they told him like, why not open a like $100 account? And then I thought about, why not? Just like, it's not much of money. It's money, but not like really much. And then yeah, why not? And then I did it like that.
Yeah.
Just like traded with.
It's exactly right. Like that's what we all did. I think like Jacob, I guess, inspired most of us to start trading. Yeah, I started with a $100 account. Like I blew a couple of accounts. I lost like quite a couple of accounts with a lot more money than 100. And then I was just like, okay, well, clearly I don't have the skill yet. So I'm just gonna take a step back, gonna understand what actually goes into trading, trade this $100 account, so that it's still live money. I'm still losing money. I'm still gaining money. But then once that happens, like I'm only risking 1%, which is the minimum lot size, 0.01, right? Once that happens, and I can trade profitably, I'll then test my knowledge. And it's never too late to say like, oh, okay, I'm just going to take a step back from trading because I don't feel like I understand everything. There's always room to learn. Like I'm still learning. Right? Don has so much to teach. Like he's evolving every year as well. So like the pace he's going at is very quick. So like for a beginner to come in and just like understand everything immediately is difficult, right? Unless you put like a lot of hours into it. But it will happen eventually, and you will find your own trading style. But yeah, it's just a journey. Don is literally a Pokemon. Like I don't understand that guy. He just evolves out of nowhere. He gains like 3 levels in like one day after one fight. That's a beast.
Can you like, you started, you told me like you started in March,
Yeah.
And
Oh, my kind of story with trading?
yeah, that also, and like, yeah, your experience. You seem like really experienced.
No,
And
so yeah.
What?
So essentially, like, I started in March, right? I basically just
Yeah.
stumbled upon Don after I traded a couple different styles, like support and resistance. I traded some swings and everything, but I wouldn't say I went round a lot. I would just kind of look at a style and be like, does that fit my lifestyle? Like, could I hold a trade for like weeks and be like, oh wow, that feels really nice. I just realized I couldn't, so I was looking for something more short term, and then I found Dawn, right? And then that was in March, and I was like blowing accounts until I would say April. I had a goal actually. I was like, okay, yeah, 2 weeks, right? 2 weeks is enough. I'm gonna be profitable after 2 weeks. Things are gonna be good. And I kept blowing accounts, right? And it was like April or whatever. And then after that, I was like, cool. I'm just gonna open a $100 account, and I'm just gonna join the streams every single day. I bought the Zoom, right? I bought the course at that time, and then I also just kind of looked at his streams every single day, the breakdown, trying to understand what he's looking for, understand like what he's seeing in the markets that I'm not seeing. And then once I kind of got like a good idea of it, he had this course in Miami which I went to, but it was mainly to like, at that point I kind of understood the kind of playbook and everything. We hadn't had liquidity grabs or wick entries at that point, but then I went to Miami. It was mainly just to meet Dawn and Wicks to see what they're like, because I'm a very people person. Like, that's why I opened the Zoom stuff, right? I want to talk to people instead of just talking to myself. Like, talking to Don, meeting him and understanding what he is, like what kind of person he is, was quite important to me. And then after that, I just started, interacting with him more, and like I'm doing a lot of projects with him at the moment. with the whole new trading journal, a couple other things as well. So yeah, that's just like how it progressed. But in terms of experience, I would say I don't really have like 5-6 months of experience. It's not a lot of experience, but I'm understanding that experience is just a time game, right? As I continue to trade, as long as I understand what mistakes I'm making and improve upon them, I'm fine. If I don't improve, then I'm just stuck on the same mistakes, right? Obviously, it'll take more time to improve on certain things than others, but it's still the process. So yeah, currently I would say I'm still lacking the overall experience, but in terms of like understanding what we're looking for in the charts and in the markets, I'm relatively confident that I know what I'm looking for.
When you say you blew a bunch of accounts, were you not necessarily following the strategy to a T and like putting your stop losses too far and trying to over leverage because you had smaller accounts to make more money? Or were you following the strategy and just lost a bunch of trades consecutively just from not knowing it?
Yeah, so I was blowing accounts before Don. Once I met Don, I think I only blew one more account. But I blew like 4 or 5 accounts before Don, and those were like swing trades. And like I didn't know what risk management was. Like I'd be putting like a 3 lot or something on like a swing trade, and then I like my account size was like 2K, and I would be swinging like a couple hundred pips or whatever, and then like just over the weekend I'd be like, oh shit, I guess I got fucked by certain things, right? And then it's just like understanding that. Well, over time I realized that swinging just was not for me at that point, because I didn't have any knowledge of the markets, and I didn't really know what risking was. Like I was just cool. I just open an account, like more lot size equals more money, right?
Yeah.
And then after I met Don, I was like, okay, cool. Like this man has a strategy. I'm gonna buy his course. I'm gonna take it. Like, would I rather lose I think the course was $500 back then. Would I rather lose the $500 by myself, or would I rather put it into my learning? Right? It's just that was like no brainer. So so the course was insane. Like it was insane value for me, right? And then Miami, it was more of like, oh, okay, so why am I buying Miami? I was like, okay, I'm buying Miami to meet him because I'm a people person and it's going to be for my own benefit. And it turned out to be, again, one of the most valuable things I've done. It was my first ever solo trip as well to Miami.
Oh wow!
So yeah, it was good. I would recommend coming to the London in person when you guys have a chance. What's a good lot size to trade for a $700 account? Depends what you're trading, right? If you're trading gold, I can let you know. If you're trading something else, it's, I don't know, right? I only trade gold. But $700, if you're risking 1%, that's $7, right? So if you're using a one lot would be, so like a 0.07.
0.07.
Yeah, 0.07. That's 1%, right? If you want to risk 2%, then 0.14, right? Yeah. Why is gold going up now? I mean, if we go on the 1 minute time frame, you might see it actually want to come down later. I don't have enough candles for 30 seconds. Fuck. But yeah, like gold can go up or down, it doesn't matter. I think the daily's just opened up. It's creating that top wick first, right? In line with what we're looking for these sells, right? You've closed respecting on the daily. If you come up to these levels, sells. Like this aligns on the daily, right? Looking at these, it's beautiful.
Do you trade Asian, Elvis?
No, I literally just trade like, because I have work at like 9 a.m. So if I trade Asian, it's like I get to sleep at like 2:30, and it's just not sustainable.
Yeah, because I think I've seen the setups. They flow. See the one from yesterday when it touched like 1913. That was like, it was like Indian Asian shit, and I was like,
yeah, I literally mocked it up, and I was like, okay, I was hoping this was gonna happen in New York or whatever, right? And it just happened in Asian. I was like, fuck, okay, I could have caught like 30 pips there, but it's okay. It's alright. Yeah, guys, I'm gonna probably end the streams here. A good full hour for everybody to ask questions, right? So cool. thanks for joining up,
Thank
guys.
you.
It's been great
Thank
having
you.
you guys.
Yeah.
Wait, last question.
Yeah.
Does anyone of you guys will trade Asia?
So Wix trades Asian, so join up Wix's stream.
But does anyone like does Zoom? Just like
So Wix also does Zoom, but you have to buy access again.
like
I don't know.
I think there's a voice channel in the Evolution chat. I might pop in there if you want to join there.
yeah, why not? It's
Yeah.
easy.
Yeah,
Yeah,
Alright.
I have some stuff to do though, so I might though. If you want to join there when like an hour and 30 from now,
In an hour?
and 30, yeah,
Be live.
that's when Wix goes live.
Alright, I'm there now. I'm there.
nice. Sounds
Cool,
good.
cool. Yeah, no promises though, but I'll pop in though. Just join the voice channel.
No, I also. I will do that.
All right, cool. Well,
Cool.
yeah, thank you very much, guys, for joining. Thanks to everybody on the YouTube live. And if you guys want to join Zoom, just DM me, right? It's a manual process at the moment, but yeah, Bougie, I'll hit you up as well. But cool. I will see you guys tomorrow.
All right, but
But
Thank you
Peace,
very
guys.
much. See you guys.
but